and we have eminent speaker today with us for this, addressing us on this session. I request Chairman to escort Rahul Gandhi to the dais and greet him with the floral bouquet. Welcome to you, Rahul. Request Chairman to give a
Good evening, members. Well, the Secretary did introduce the topic as 80-20 rule. Of course, for me as an audit practitioner, 80-20, if I listen, I feel that, oh, POCM, 80% completion, 20% rule. So I think it's somewhat where I can relate. In GST, especially in real estate sector, in the JDA agreement, this gets very quite interesting, I think so. So to deal with this session, we have a very young speaker, CA Rahul Gandhi. Welcome to you. So today's discussion is going to be on GST, and GST is being continuously getting amended, and it's become another daily routine for us to get updated. And if you go to sector specific, it's been quite a different day altogether, different notification. And of course, to add it, always Hanish keeps sending me various other amendments every day, though I'm not in practice in GST, and that becomes my update for GST. With this, I welcome you all. Before we start this session, I have a small announcement to make. We have this Southern India Regional Conference coming up shortly. I think this is after a span of 8 years. We've got the opportunity again to host this conference. So this is going to be a concoction of all the topics which we deal in our daily practice. I request all the members to register and take the benefit out of this. Of course, this year is going to be a bit change because Bangalore recently hosted a very big event as well. Post this, we have this another event coming up, so it's going to be a Damal Dhamaka for Bangalore branch. So I request you all to register, take the benefit out of this. And I would not like to take too much of your time because experts of GST are here and here, so I wouldn't want to take much of your time. With this, welcome you all. Over to Secretary for the brief introduction. Thank you.
Thank you, Chairman. I take pleasure in introducing Rahul Gandhi to you all. He is a practicing chartered accountant who cleared CA all levels at first attempt. And he was working with Big Four posters articleship and then started on his own. Right now he's practicing on his own. He is a co-author of a technical book on GST online gaming industries. He is also a co-founder of an organization called Ginwani. I'm assuming gin is not the gin drink. No. Well, I don't drink, but I keep track of this. And mobile application and actively participates in various organizations. His dedication to education is evident through his efforts in sharing knowledge, and that's how he has authored many books. One other book which he has authored is Truth for Youth, and it has been very successful in English, and now he is also releasing the Hindi version. And he is also a speaker at various forums, KCA, ICI and other forums. Rahul, it's a pleasure to have you here, and thank you for being here. Over to you for the session.
Good evening, everyone. Am I audible?
Yes.
Before we start, one simple question. How many of us is practicing in GST? Sir, I know. So it will just help me to make that session relevant. Out of the audience, few are practicing in GST, few are doing general practice or specifically focused in just came for CPRs. Okay, done.
Not CPRs, to learn especially.
Please confirm once you see the presentation. Is the marker hovering there?
Yeah.
Okay. We are there? Okay. Good to start. So, first thing is why this topic is important at this point in time. The regulations which I will be talking now, they were brought on they were effective from 1st April 2019. Why is this relevant now?
In June we have to, because we have to pay the 80 or 20% within the June of this year.
Correct. June has lapsed. Then, I'll give you one more reason why this is relevant. Though that is the right answer. So, 1920 being the first year of implementation, like coming effect of these provisions, 31st August is the last due date to issue the order under 73 for 1920. In this session, the topics which we are choosing is, I'm trying to build a interpretative skill and how do you implement it practically. If you get an assessment, how do you deal with it? Few tips and tricks there, okay? Because that is how we can add value as a practitioner to your client also and to our knowledge base also. The points which I am trying to tell, we can present it from 3 angles. That same point, we can use it from 3 angles. One is, say, as we said, as Sir said, knowledge, to gain knowledge. Second is, that same point can be used to pitch clients. Well, I have taken a seminar on 9C, attended one of the seminars of Hanish sir. I picked up that point and presented it to pitch clients, and we are getting a good response on it. So please look at this session from that angle also. And third is, once you have the points to pitch, the client is yours. You won't go anywhere. Okay. With this, what we are going to study in this, or what is the knowledge we will acquire, let me take you through that. Since real estate sector is a big sector, there are different transactions which are there in real estate sector. We'll just have an overview of these transactions. It will help us to develop this basic understanding. Then what was there before 2019, 1st April 2019, and post that what is running. Then a practical overview of a simple transaction, like a bird eye view I would say. If one transaction is taking place, there are 4 legs of it. We will see all the 4 legs of it. Then what are the conditions when we opt for new taxation regime? Then this 5th practical approach for 80/20, which is the crux of this, this presentation. Rest of the things you can find, but this is the USP of this. Then comes FAQs, then we'll take up few questions I have drafted, like saying what can be, and I'll open to take the questions from you. Shall we start?
Yes.
Okay. We'll just start with the first, background. We all have practitioners. In Bangalore it is very good, like an individual will be there who is an NRI, who has a land, then a builder will be there, I have money, we both come together, chalo, paisa banate hain. Correct? Have you noticed this part? As an individual, how many of you are practicing here in Big Four? None, na? So we'll get individual clients. From there, those clients will grow big. These points will help them. When we say real estate transaction, we see sale of land regularly happening. We have seen sale of land transaction. Can I have a poll? How many of you have seen sale of land? Okay, wonderful. Sale of land and building regularly. You do capital gains planning and the income tax and all. Third is, proprietor will be there, general. He has made money, then he constructs house. Correct? That's the third transaction. Fourth is works contract. He doesn't do self-construction, he hires a contractor to do construction for him. Fifth is this plotted development. This is where you can scale. I've seen many of them practicing GST, but real estate sector somehow, most of us have not touched it. Isn't it? So my first advisory once I started practice was this plotted development, which we did for one of the builders in Bangalore. They are having around 4 decades of experience in Bangalore. We did an advisory for them in plotted development. Then comes JDA, which I told, all these NRIs and all which come into it. Then illegal construction. Any example for illegal construction? I'll tell. Have you been to Bangalore City Market? City Market, there the permission will be for 2 floors. They would have constructed 5 floors, 6 floors. Yes or no? And this is a normal case. Other places also this happens, but I'm just trying to link it. Okay. Then there is something called redevelopment. Redevelopment is something you have a building. Say for example 4 floors ka building you have. Then a person comes, a builder comes, saying that okay, you have this building, I'll construct another 10 floors on it. 2 floors you keep, 8 floors you give it to me. Getting it? Getting it? This is the transaction for redevelopment. And approved resolution plan. What is this? Any idea? Okay. This one, insolvency and bankruptcy code. We have heard about it, right? What happens there? A liquidator will be appointed. If the company has a land, then they want to convert it. These are the options. Now the same points, how do you pitch to your clients? Overview everyone tells. As an practitioner, you have to help your clients. How will you help? I'll give an example. Redevelopment. Suppose you had an advantage. In your network, you will have a builder. Correct? You will have a builder. And a person will be there who has 3 or 4 floors. At the end, client is looking for value addition rather than certification. Do you agree? Yes or no? Can I get yes or no?
Yes.
Yes or no? That builder, if he is working on that scale of transaction, you can say, I have an opportunity wherein you can mint money. Look into this opportunity. And how will you do that? During ITR filing season. Yes or no? Yes or no? Second, one more option shall I tell you? To mint money. Illa, ITR ಎಷ್ಟು ಜನ ಮಾಡ್ತೀರಾ ಇಲ್ಲಿ? Kannada everyone knows? Raise your hands.
Yes.
ತಿಂಡಿ ಆಯ್ತಾ? ಆರಾಮ್ಸೆ chill ಮಾಡೋಣ, ಮಾತಾಡ್ಕೊಂತಿರೋಣ. Let the session be interactive. We'll learn something. I'll learn from you and you will learn from me. Okay? How many of us are doing ITR here? More than 50 lakhs. How many of them have land there? Many of them will be having land. If you have builder in your connect and that land address also you will have, you can ask your client if he is interested to mint money, then connect him with a builder. Isn't it the value addition which you are giving to the client? Then client will never go to any third party. This is how you can use this background to build your practice. Because I am in the stages where I am building your practice, so that's the reason I am telling you. After coming, now we have looked into the types of transactions which are coming. The next, where we are focusing on is, suppose a building is constructed, residential units are constructed by a builder or an individual or someone, and that thing is held for sale. Then what is the GST rate should be charged? Whether ITC can be availed by them or not. If it is availed and we have done something wrong, what are the way forward? What are the approaches we have? We will discuss into that. Okay? If you have a litigation in that area, what are the key points you can have? Because those key points will help you build practice and pitch client. Show them that you have knowledge. Okay? First, before going into that, we should understand why this new rate regime has come. Okay? So we'll understand the old rate regime in just 5 minutes, not more than that. These rates I'll just quickly take you through. So, before 1/4/2000, when was GST introduced? 2017. 1st July 2017. From 1st July 2017 to 31st March 2019, we had these rates. Okay? When I say these rates, suppose a builder is constructing a property, and if it is falling under Pradhan Mantri Awas Yojana, then the rate of tax is 8%. 8% we call it as effective rate. Okay? Say a transaction is done for 12 lakhs. 12 lakhs into 8% is how much? That much is the GST he has to deposit to the government. And since a property comes with the undivided share in the land, you directly don't get the deduction of land at the value which you want. They give you a standard deduction of 1/3. Okay? So if I do 1/3, say 12 lakhs ka property, after 1/3 deduction, 8 lakhs into 12%. If I do, this is also one more rate. So rates under real estate sector are categorized under two. Either you can take 8% or 12%. 12% after giving the deduction of land, or 8% on the net value. Both calculations will come same. Then other than Pradhan Mantri Awas Yojana, any rate comes that is under 12%. Okay, effective rate 12%. Are we clear till here? Are we clear till here?
Yes.
Okay. Having understood this, why is that government bought this new rates? Any guesses? Ella channel.
The benefit of input was not being passed on to the final customer.
Correct. That is correct answer. Then, any answer? So, as practitioners, we should know if our client is facing the problem, we are the channel between the government and the end user. How do we take up these issues? Correct? If we take these issues up to the government, then there is some changes which a government can do. Do you agree? Yes or no?
Yes.
Yes or no?
Yes.
Correct? So, same issue, I had an opportunity to do it for the mining sector. What happened? Royalty. You know royalty in mining sector, query, Tumkur, query mines is there, sand, M sand, P sand. Their royalty and all will be there. So there is a litigation in royalty, whether it should be whether we should pay GST on it, yes or no. And matter is pending with Supreme Court for last 7 years. These industries, they have their own association. So I drafted one representation on behalf of that association. And that association will give it to the government. When we say to the government, who is it? Finance Ministry. Same thing happened with this sector also. Two major problems they faced. Okay. One is government was not getting revenue. Low cash output was there. And second is, as you rightly mentioned, your good name? Sujay. So the rate, the output, the end user was not getting benefit. Because of these two problems, there is an organization called CREDAI. What is the name of the organization? CREDAI. CREDAI. Why am I telling all of this? Is it relevant? No, for technical knowledge it is not relevant. If you want to build a practice, it is relevant. Just go and give a presentation in CREDAI, all your, what do I say? If you want to enter into real estate sector, then that is a good organization at India level. At Bangalore level, which is the organization? Which is the organization? BRIDAI. Want real estate sector? Since we can't, can we solicit business as CAs? Can we take business? Can we say client, दे दो मुझे आपका audit करना है? No, ना? How will you impress client? Or how will you show off in front of client? Huh? So you have to go in front of client, showcase your education. Ashte, nothing more, nothing less. Simple, huh? Arthmainda? Purinjida? Okay. That is what we have to do. This same problem was taken up by CREDAI, then they gave it to the Finance Ministry or GST Council. Like that, CREDAI was one organization. Second was Maharashtra RERA. Maharashtrian there, what people started doing is, since the rate of tax, if you see, 12% is the rate of tax. Okay? So, as an end user, what I will do? I know GST. So, you are chartered accountants. You will help your client. Individual come, sir, ನಾನು ಪರ್ಚೇಸ್ ಮಾಡ್ತಾ ಇದ್ದೀನಿ 12% GST ನಾನು ಪೇ ಮಾಡ್ತಾ ಇದ್ದೀನಿ ಇವಾಗ ಪರ್ಚೇಸ್ ಮಾಡಲಾ ಬೇಡ because as end user he can't use the GST, right? Input can he claim? You have read schedule 3 land and building GST not applicable, schedule 3 entry 5. Do you recollect?
Yes.
Recollect? You'll advise client, don't buy now, after it is completed then you buy. So what happened because of this? No one started booking the flats. They were waiting for flats to get completed, OC to receive, then to start building. Understood? That is why government considered no, it is good that we should change. Understood the reason? So by changing, so what would be the change that government would be bringing? They will increase the rate or reduce the rate? Increase the rate or reduce the rate? Reduce, huh? Same thing they did. That is what we will look into. Okay. Most of them who are doing in GST, they don't know about these rates. These rates, if you know, that is also more than enough. What is it? GST rate for NRR. NRR stands for New Rate Regime. Okay. Here I have classified the projects into 3 categories. First is affordable. Okay. Affordable. What does affordable mean? If the consideration is up to 40 lakhs, 45 lakhs, and the square meters is up to 60 square meter, then qualifies for the condition of affordable. Are we clear? In that case, you only have to pay 1%. Now, will the customer buy the flat? He'll do pre-booking, yes or no?
Yes.
So, working capital issue of real estate industry will be solved, yes or no? Correct? Yeah, that is what we did. Government said, okay, if it is affordable, you just pay me 1%. Say your flat consideration is 80 lakhs, pay me, suppose now they have started taking the booking. Okay? Say 10 lakhs is the advance. On 10 lakhs, 1%. On next 15 lakhs, next installment. On 15 lakhs, 1%.
Isn't
The
it,
effective rate is?
isn't it 90 square meters in urban areas? Affordable?
No, we are talking 60 square meters if I'm not. You can check. What we can do, if you have all writing pads, we'll create one parking lot. What is parking lot? You know parking lot, huh? So, any questions we have, in top of the, like at the end of the page, leave 5-6 lines. During the session, any questions you have, keep writing them. Because while I am taking the session, most of the questions will get clear. And then at balance, we will take it up at the end. Are we clear? Okay? We say it as parking lot. Then, so if that is directly 80 lakhs consideration, 1% I'll pay GST. What is the one more option? 80 lakhs I'll take 1/3 deduction, and on 2/3 of the value I'll pay 1.5%. This is one option. Suppose it is a residential project which is non-affordable. Okay? Then you have to pay 5%. And there is no ITC which you can claim. Earlier, ITC could have been claimed. Here, ITC can't be claimed. 1/3 land deduction. If I take one more rate, it is 7.5%. Okay? Say all other projects which are purely commercial, which will fall under the category of 12%. Okay? Any commercial projects. Who are the big builders in Bangalore? Prestige. Then Mantri. Then Purvankara. Then Brigade. Shobha. Ranka. That is how we will learn practice. Who are the key players? We have to know about them. What are the challenges they are facing? If we help them with their challenge, then we are building our practice. Okay? So in this, if it is a commercial project, 12% is the rate with ITC. You charge 12%, you claim ITC. When I say ITC, what are the things which are covered in ITC? Any material which is used on all of that GST which you are paying, everything you can claim. Are we clear till here? Are we clear? Okay, what all did we look till now? 2 things we covered. First thing was different types of transactions and how you can use for your practice. Second is this old rate and the new rate comparison. If you read this thing in notification 3/2019, by the time you finish the notification, it will be mess. So it is a very simple format. I am just trying to collate it. Next. Now, since we are building this practice, let me give you an example. This is how you will pitch the client. Okay? A simple transaction. There is a landowner. Okay? He has 5 acres of land. Do you agree? 5 acres of land. There is a builder. What is the name of the builder? Take an example. Brigade is there. Okay? In 5 acres of land, they have a project which they can do. Okay? So Brigade and that landowner both sit in front of each other. They crack a deal. Okay. you do this thing, you take up my land, do construction work there, give me 40 flats, I'll keep 60 flats. What brigade is telling? 40 flats landowner will get, 60 flats they will keep. The transaction is clear. Only this much is the transaction. Ibru Kutro 40 flats ನನಗೆ 60 flats ನಿಂದೆ ನನ್ನ ಹತ್ರ ಲ್ಯಾಂಡ್ ಇದೆ ನಾನು ಇನ್ನೊಬ್ಬನು ಕನ್ಸ್ಟ್ರಕ್ಷನ್ ಮಾಡ್ತಾನೆ. ಓಕೆನಾ? ಅರ್ಥ ಆಯ್ತಾ? ಓಕೆ. Now this transaction we have to view it from GST angle. Do you agree? Because we are GST experts now. Everyone in this room is GST expert. The first leg is development right. When the landowner, if you have a land, it is transferring developing right. Is it transferring the land? No. Why?
It's transferring the rights on the land.
Okay. What are the different types of rights you have on land?
Development right.
You can use the land. You can dispose the land. Here I am just giving an example. Here I am just giving him to develop that land. That's why full land is not transferred. A land has 4 to 5 different parts. So when it is joint development agreement, then we call it something called development agreement with coupled interest. What is the name? Agreement with coupled interest. It comes under section 202 of Indian Contract Act. That's why the other person gets the shareholding in it. Okay. At the end, I'll tell you the source of my knowledge. Okay, so that if you are interested, you can build. Okay. Then next. First leg is development rights. Second is brigade is like no. Okay, you are giving me rights to develop that 5 acres of land, and brigade is giving construction service. This is the first leg, first transaction. Second is landowner is getting 40 flats and brigade is getting 60 flats. Correct? Okay. Now what will landowner do? Brigade will need money. Will they put full money from their pocket? If they put that, they won't be businessmen. Businessman does business with the other people's money. Okay. So brigade want to solve their working capital issue. What they will do? They'll start booking the flats. We are coming up with the project. Start booking the flats. Okay. So they will say 40 flats you can take, landowner 60 flats I am taking. So before construction is complete, landowner out of those 40 flats, 25 he has sold. Correct? And in this 25 flats which he has sold, as per new rate regime, he will dispose the tax either on 1% or 5%. Do you agree? Yes or no? Because all of this is residential property. I am talking about residential real estate projects, RREP. Okay. Second, say after OC is received. OC, you know? OC. When we develop a property, building is constructed. Saying that full building is constructed, government gives one certificate, occupancy certificate or completion certificate. Okay. Either both are different, occupation and completion. Both these certificates are different. So they will give something called occupancy certificate or completion certificate. After completion certificate, the landowner has sold 12 flats and 3 remain unsold. Okay. On those 12 flats, he has to reverse ITC. How he has to reverse ITC? Based on carpet area basis. This is one of the key changes which has come. Earlier, before 2019, we used to do reversal based on value. Now we do reversal based on carpet area. Clear? And this is sold divided by total unsold, total flats. Correct? Second, brigade has 60 flats. In this 60 flats, 45 he has sold it. Correct? Plus and 40 he has transferred to landowner. Correct? So on this total 40 plus 45, 85 flats, he'll remit GST. Okay? In new rate regime, he'll remit GST and he can't claim ITC of it. This is the conditions of new tax regime. Okay? After OC what has happened? 10 flats he has sold. After OC if they sell, what happens? If the transaction falls under schedule 3, sale of land or building, apart from So it falls under Schedule 3, which is neither goods nor services. So no GST. So no GST, Schedule 3 transaction. Only on development rights, the builder has to pay RCM. Okay, we'll take it forward. You understood? I'll tell you how the transaction is charged, Volkan. On construction service, are they paying GST? Both of them, 40 flats, 60 flats. Now these unsold flats are there. On that, this development rights, they are saying it is exempt. If you are selling it before OC, then you need not pay tax on this development rights. If you are selling after OC, then pay tax on this development rights. When I say development rights, what they will do, since it is development rights, on output they won't get tax, correct? So on input, they'll ask this builder to pay under RCM. Earlier, landowner was required to pay tax on this development rights. Who pays tax? Supplier or recipient? Supplier. Who is the supplier of these development rights? Landowner. Government, from 1st April 2019, they started reversing. Like RCM they started. Okay. Before this, in 1st January 2018, they had shifted this liability. Earlier when, okay, tell me when Brigade takes this project, how many years they'll take to complete this project? 3-4 years, 5 acres ka land. When is this development agreement done? Today. What is the year today? 2024. The project will be completed by 2029. When should they pay GST? When should they pay GST? Huh?
29.
2029, huh? No, but transaction has happened today only, huh?
But then you said only after, if it is unsold, sold after the OC, you said the development rights.
Earlier, they were facing a problem. What was the problem? They were facing a problem that time of supply. What is time of supply? Receipt of payment. This is service, na? Construction is service. How many are, if you have doubt in this, whether it is goods or service? Schedule 2. Okay. It is service. In case of service, what is time of supply? Section 13. Either receipt of payment or 60 days from date of completion of service, whichever is earlier. Yes or no? Yes or no? Dude, if you don't know, you can tell me. Aram se. Okay. So what has happened? Now in 2024 only I have completed the service. Na? Development rights are transferred. Then why am I asked to pay tax in 2029? So industry is facing problem. Now only when will they mint money? Over these 5 years, correct? Not now. If government is not acting as an enabler to the industry will go for toss. They won't grow. If they are not growing, what will happen? Employment won't come. Big problems will come. Okay? Government won't be there. Simple. So to ease this, when was GST introduced? 1st July 2017. From 1st July till 31st December 2017, on the date of JDA only they are supposed to pay tax and landowner had to pay tax. Okay? From 1st January 2018, they got a notification saying that you don't pay tax now. You pay it on the date of completion or OC, whichever is earlier. Clear, huh? Clear, huh? In 2018 they bought. But these changes we are talking of 1st April 2019. So they cancelled that notification and they bought one more new notification saying that same principle will continue. What is one more change? Earlier, landowner had to pay tax. Now, to ease the compliance, your builder will pay tax under RCM. Clear? Arthmaita? Puranjana? Okay. We'll start. This much is clear? Shall we move ahead?
Land or
Parking.
you asked if it's clear. When are we going to come back to the parking lot?
At the end.
Just one. So how does the landowner get ITC? I mean, builder has all the constructions that he is doing, all the purchases, he gets all the ITC.
Correct.
From where does the landowner get the ITC?
Why is he concerned about ITC?
Because you have written remit GST with ITC.
Correct. So I'll tell you.
There is no GST.
No. What is landowner getting? Construction service?
Yes.
40 flats the other person has given.
Correct.
Brigade has given.
Okay.
On those 40 flats, landowner has to pay GST.
Right.
at what rate he'll pay, 1% or 5%.
Correct.
That landowner can claim as ITC. There is special provision only for landowner.
Can you just repeat this part? So landowner sells this 40 flats.
Landowner is getting 40 flats.
Correct.
Correct. On 40 flats, if he gets, they will be charging an amount for it. He'll pay GST on it.
Landowner will pay GST.
That one he can claim as ITC. It is simple trading, ma. Trading. Flats only there, flats only there. If goods bantu, I have taken this phone, I have given this phone. Can I claim ITC? Can I claim ITC? Yes, sir. Yes. But in real estate, just you have bought this transaction. What will happen? For this phone, I can claim. Suppose I get this water. Okay. Since landowner, he has now responsibility to sell the flats. How will he sell the flats? By carrying out marketing activity and other stuff. For that, he'll hire an agency and all. Correct? At that time, he'll be paying GST and all. Correct? He can't claim ITC for that. Only on these construction rights, we can claim. Okay? Clear? Arthmaina? Okay. Wherever doubt, all this, I'll share you the source at that. Okay? You're good. Now next. Saying that, having that we have understood, government has bought these provisions to help industry to grow. Okay? What are the conditions when government is giving this lesser rates, lower rates of 1% or 5%? What are the conditions which government is bringing up? Are we all following up till now? Okay. So government has given 5 conditions. Okay. Just for ease of reference, I'll name first condition as composition scheme. Under composition scheme, what do we have to do? We have to pay this GST in cash. Do you agree? Can the composition person claim ITC? Can the composition person claim ITC?
No.
Same in building also. You can't claim ITC. You have to pay GST only in cash. But if it is landowner, then you can. If it is builder, then you can't. Clear? Huh? Okay. Next. Who are these new rates applicable to? This is applicable to residential real estate projects. Okay? Not others. If commercial projects and all are there, then same old rates will continue of 12%. If we are charging 12%, you can claim ITC also. ITC bantu, ITC hoitu. Clear? Huh? Okay. Next. What should we do of ITC? If ITC is there, on any purchases which you do, you can't claim ITC. Understood? Huh? He is paying tax at lower rates. What are the purchases in construction industry? Steel, cement. Then?
Services, architect services, legal services.
Architect, legal. Then? Labor. Next. Because all of this will help.
Subcontracting services.
Subcontracting services. Because I will be taking at the end one Excel sheet. Okay, live Excel sheet will be testing all this knowledge, whether we have understood or not. Okay. Next, JDA tax. JDA tax is tax on development rights. Who will pay? Brigade will pay or that landowner will pay? Huh?
Brigade.
Brigade will pay. We understood, Nama? Here only. One slide back. Okay, na? Okay. Shall we move ahead? Okay. These are slow basic conditions. Next conditions. Okay. Whatever tax we are paying, na, we will, for ease of reference, in law nowhere this term is used. For our ease of reference, we will name it as excess URP tax. What we will call it as? Excess URP tax. Excess URP tax name, no? What does that mean? URP means unregistered person. Tax means tax which we have to pay. Excess means we'll understand. Okay. So government has bought this RCM notification under 9(4). Okay. Wherein if purchases are from unregistered person, you have to pay tax. Okay. Then what are the conditions for it? Saying they say 80%. Suppose you are opting for new rate regime. Okay. This is my new rate regime. Okay. Wherever I am be like wearing the watch, I will be paying output. But input whatever is coming, I am paying under new rate. Input whatever is coming, 80% of it should be from registered person. Okay. If more than 80% is from registered person, okay. Less than 80% from registered person, it means what? More than 20% from unregistered person? Yes or no? If it is more than 20% from unregistered person, have to pay tax on it. Clear? Huh? Under which section you will pay? Under 9(4). Which are the charging sections for GST? 9(1), 9(2), 9(3), 9(4), 9(5). Huh? Levy section. Okay, na? Then, any shortfall beyond 20%, when you should pay tax? They are saying you pay tax by June. Okay. Suppose a project is completed. Now we are in the we are filing IT returns for 23-24. Correct? Huh? We have to pay tax for the year 23-24 by June 24, by the end of next quarter. Once the financial year is complete, by end of next quarter we have to pay tax. Clear? Huh? Okay. How many of you are aware about RERA? RERA here. RERA, na? Okay. When we are going into that industry, na? When we are going into that industry, we have to keep two things in mind. One is our technical knowledge, which is domain expertise. One is the regulation which is guiding that industry. You should have a fair knowledge of that so that you can help these industry players. Okay, no? And yeah, RERA, let me give you two minutes and explain about RERA. 2 minutes. Okay? It is deviation, but it is helpful for the future understanding. What is RERA? In RERA, so if you want to just at a bird eye view, if you want to understand the RERA registration, how it is, RERA is a welfare registration. Which one it is? Welfare legislature. GST is a tax legislature. When we say welfare legislature, there we have to do purposive interpretation. Purposive in the sense, the purpose of that law should be satisfied. When we say tax legislature, it is strict interpretation. When we say strict interpretation, is, of, and, or, all of that. Understood? Huh? Understood? Huh? So, in notification, we have borrowed definitions from RERA. Okay. Here they are saying project wise you have to pay. Will the builder maintain that accounts? In a single GST registration, Brigade would have 100 projects. Will they take 100 GST registrations? No. One GST registration will be there. 100 different projects will be there. Project-wise accounts you will be maintaining. For that project, you pay by June. The requirement to maintain project-wise accounts is coming from their RERA law. So it is not a big thing for them to maintain. So government has bought everything in sync. Okay. When has RERA come? Around 2018, if I am not wrong. 17. So they have interlinked both. Second is, say 9(3) purchases. Once you have paid tax for your URP purchases, okay, unregistered person, shortfall of 80%. It means more than 20% you have bought from unregistered person. Chota pota kirani shop you have bought. Then you have to pay tax on that. Once you pay tax on them, it becomes part of your 80%. So for that, one is actual 80%, one we name it as deemed 80%. What will say? Deemed 80%. So anything we are paying tax, it forms part of my deemed 80%. Clear? Huh? Okay. Then when are we paying tax here, this shortfall? We are paying in June, huh? But every month we are doing some activity. Huh? So government is saying, any cement you purchase, this is a key raw material. Okay, cement you purchase from unregistered person, pay me tax immediately in that month itself. Okay, and in that case rate is also 28%. Clear? Huh? Cement. And any capital goods if I purchase, on that also you pay me tax immediately after that month. Say suppose I am in the month of July, I purchased cement from unregistered person. Okay, one kirani here only at local store is there. I purchased from there. Then August 20th I have to pay tax on that. Suppose I purchased instead of cement, I bought say M sand, P sand, and that too from unregistered person. Then I have to pay tax next year after June. Understood? Huh? At the end of June we have to pay. Clear? Huh? Done. We'll understand all of this in our that practical case study. No, these are the notifications which they have come up. What they are saying, if there is supply of goods or services, if shortfall less than 80%, then promoter has to pay tax. When I say this promoter, in full GST, nowhere promoter would be used, only in this notification. And RERA. Okay. When we in RERA, promoter means there will be two types of promoter. One is landowner promoter, one is builder promoter. Okay. Both of them will be there. When I am referring promoter, it is builder promoter. Okay. Then cement. Who will pay tax? Promoter. Brigade will only pay tax. Then if capital goods, who will pay tax? Brigade will pay tax. Why? Why landowner is not paying?
It's not undertaking any consideration.
Good. You are attentive. Price after session. Okay. Then, so, say now you have to pay tax. There should be some HSN heading under which you have to pay tax, right? Suppose I am saying I am land and purchasing. Say, what will happen? Just to extend that example again, I have purchased cement, steel, M sand, P sand, architectural services, all of them from URP. If I start and set applying HSN code for each of them, is it a time-consuming activity? Yes or no? So government has come up with some ease, saying that anything of that sort comes, any goods comes, then this new entry 452Q is introduced. It takes the color, all that earlier things which were classified under respective heading now, they have cancelled it, and it takes color under this. This is your new home. Any M sand, P sand, architecture service, if it is coming from unregistered person, now you don't sit in that home, you sit in this home. This is a new entry, and you have to pay tax at 18%. Why 9% is written? Because it is CGST. Okay, now? Then same way, services will also be there. Correct? For that, a new entry is introduced. This is entry number 39. For that, you pay tax under 9%. And they are given overrides any specific chapter or heading which is covered. Clear? Huh? Okay. Shall we move ahead? We have understood the conditions? Okay. This is the key part. Till here, if you have not paid any attention, well and good. Now, if you pay attention, your promotion is pakka. Okay, na? In promotion in real estate sector. Okay. So, having understood all of this, I have devised this 6-step approach. Simple, na? At the end, I need to apply it. For my application, what is simple, what is easier, I will be doing that. Yes, sir? So, this 6-step approach I have come. What is this 6-step approach? Six-step approach, I have divided into 3 and 3. First 3 steps and next 3 steps. Okay? In first 3 steps, I will identify the supplier. I will identify my supplier. Okay? I will identify what all are the supplies. Okay? Third is where I am using it. Clear? Huh? Supplier, supplies, where I am using it.
Any supplier or only URP?
Will come. These are the steps. So, first is identify the supplies. Okay? Identify the supplier, second step. Third step is where those supplies have been used. Okay? Understood? Huh? 3 steps, okay? Next 3 steps is what? I will apply 80-20 rule. I will discharge tax. 5th step, I will do this computation and discharge tax. Project wise I will compute, financial year wise, GST and wise I will compute. Clear? Huh? Simple? Huh?
What is it? I and IS?
Input and input services. Okay? Identification of input and input services. Input services, supplier, where have I used, discharge, compute tax, discharge tax, and do this computation when you should do this computation. Clear? Huh? Shall we move ahead? Shall we move ahead? Okay. Done. Here, stay very attentive, okay? I have drafted few practical examples. How we have to apply these examples and get the answers. Okay? What are inputs? Under GST, there are 3 types of things. Input services and capital goods. Correct? For the sake of simplicity, capital goods I have taken. Okay? It is excluded from 80-20 computation. When do I mean 80-20? There will be so many things which I am using for my capital goods. It is not forming part of any of that 80-20 computation. But still, you have to exclude it, and if you are purchased from unregistered person, then you have to discharge it on monthly basis. Our understanding is clear? Clear? Huh? Next, any cement is there, you identify it separately and discharge tax on it separately. But it will form part of my 80% bracket. If purchased from unregistered, 20% if purchased from unregistered. Unregistered. Okay? Clear? Huh? Not forming part means it is not part of that 80-20 computation. Included, excluded. We'll use this word. Okay? Then other things are any other inputs. Okay? Inputs we are categorizing into three things: capital goods, cement, and others. Then comes services. There will be services which can either be capitalized or not capitalized. Correct? Architectural services, interior services, structural engineer services. All of these will be there. That will also that is also part of my 80-20 computation. Okay? Now I'll ask one question. Huh? Okay. What about salary paid?
Schedule 3 transactions.
Salary paid. Will it form part of my computation? 80-20 computation? Why?
Salaries are exempt from tax.
How many of you know salaries are exempt from tax? Why it is exempt? But it is coming in P&L account, huh?
It is specifically exempt.
Correct. Schedule 3. We need not ask why. Because it is GST law. Law is what law says. Okay? So same thing. This is the key. But what is the key takeaway from this? We have understood salary is not part. But for our application only salary will come up. Is this an ICI exam? They have given ICI salary, one question. Same question will come in salary. Then we'll write full 10 marks. Is it that way? No. Practically. So let us see. It is neither goods or services, so it is excluded from my computation. The same thing is coming in the FAQ also. To key takeaway, we have to extrapolate this interpretation, and anything which is falling in schedule 3, all of that will be excluded. All of that will be excluded for my computation. Clear? Huh? Then whatever total cost, my P&L account is there, na? I bifurcate into 4 things. One is capital goods, cement, other than cement, and schedule 3 transaction. Clear? Huh? Clear? Huh? Okay. What are specifically excluded? Saying development rights, lease payments, FSI, floor space index, or these petrol products, that anything is coming in our P&L account, na? All of that is excluded. Government is saying you need not take all of that for your computation. So your P&L account is there, you carry out those exclusions, you remove it, then you bifurcate that into cement, capital goods and others, then you carry out the computation. Clear? Okay. Next, having identified the supplies, now we'll move to supplier. Okay, na? Whether registered or unregistered. If unregistered, which all are the cases where the supplier might be unregistered? I've given. Threshold is below limits. Simple case. Is not engaged in any business activity. Exclusively doing only XM supplies. Exclusively only doing RCM supplies. Then government specifically says you need not take registration, boss. Do aram se business. Need not take any registration. Correct? Huh? To extend this interpretation, I'll take now. If it is retrospective cancellation, okay? We'll take an example for this. Shall we take an example? Okay. We are in 23-24. Brigade, in our example, Brigade was the builder. Yes or no? Okay. What has happened? Brigade has bought materials from one of the vendor who was very good. Say the material purchased is around 2 CR. Okay. They bought material in the month of September. Now you are doing this computation monthly or year end? Huh? Year end. Correct? When they bought the material, he was registered. At the year end, when you are doing computation, you understood he was Otla guy. Fake person. Fake person he was. then will you consider him under RP or URP? As a part of your 80% or 20%? When I say 80% registered person, when I say 20% unregistered person, where will you form him as a part?
80%.
80%. Why?
Because I have paid taxes.
You have paid tax. But when are you doing computation? Now I am giving example. What happens? Say suppose we all go to audit. Correct? Huh? You will have supplier. You will take GST number at the year end. You will key in the GST portal. They will show cancelled with effect from 1st September 2019. In our audit while working, we will say, yeah, this is URP. Correct, na? If we do this thing, you are not checking GST number whether it is registered, active, inactive. Don't tell me. Not checking, na? Not checking that thing. You have to check all the supplies which are there, whether he is registered, unregistered, cancelled and all. In this case, government, we have two options. Anything we have more than two options. Always, we are never stuck in a single door. Approach one, you treat it as URP. Year end, intern did the audit, saying that okay, that is not forming part of, he is unregistered and treating it as URP. Second is, you can take as RP. Why? See, here we are building our knowledge, how we should interpret working. Why? I'll tell you. One is, as sir rightly mentioned, you are paid tax. Second reasoning, there is no provision for true up. What do I say true up? What do I mean by true up? You do 42 reversal, exempt taxable supplies you have done, na?
Yes.
What happens in exempt taxable supplies? Monthly you do reversal. Agreed, na?
Yes.
And year end, what do? If excess is there, more is there, you do that adjustment. Yes or no? There is nothing of that sort mentioned here. So, I am interpreting as I should take this transaction on the date of transaction, not when I am computing. That is the interpretation. That is a legal backing. See, assessing officer, if you get notice, what he'll do? His approach is very simple. I'll show you what his approach is. He won't do sit and do. Who is registered, who is unregistered, he won't do all of that. I'll show you what he does. We'll see what he does. He does this. Once love letter he sends. What is the name of the love letter? Huh? Yes, and kit. What is the in love letter? They'll take pura P&L ka expenses. He'll deduct payroll cost. We took an example payroll cost. Huh? First example, supplies, schedule 3. Correct? Huh? Then depreciation. This is non-supply cost. Agreed? Huh? Third, non-supply cost. All these three he'll deduct. What is the balance? 60. Officer will say, your P&L, you will upload a P&L account in your balance sheet along with 9C. Correct? Huh? Officer has that data. Officer has 2B. So P&L account profit minus payroll cost minus depreciation minus non-supply cost. Okay, this much is your cost of the project. Correct? Huh? This is your total cost. And in your GST 2A2B only 40 is appearing. So balance is URP. This is how they will send love letter. Huh? Yes or no?
Yes.
Then we have to sit and do all the workings. Huh? We need not do. There are different ways of doing it. Okay. So if it is now here it is 40% is 66. Unregistered supplies is how much? 33%. Correct? Huh? On how much I will pay tax? 13%. Full 33 you need not pay. Understood? Huh? Okay. What are the limitations? Why this error might have come? These are your reply pointers. How you mint money. There are common reporting errors which can happen. Say he would have reported under incorrect GST and B2C or any incorrect value. All are two-way mismatch cases. All those examples will be there. Okay. What is the approach you might say to your client in this case? You will say, please have an expense register, okay, with the detailed GST and follow these normal principles of reconciliation and all you have to do. Okay. I'll ask one more thing, one more question. I am purchasing something from, say, MSAN. sand I am purchasing from a vendor who is under composition scheme. Okay? Will he form part of my 80% or 20%?
80%.
Why?
Because I discharge tax in that month.
No, but vendor you are not, composition scheme you are not paying him any tax, na?
I'm not paying him, but on behalf of him, I have already paid to the government now in that same month. If I in cash. So I have discharged my tax.
No, composition scheme you can't charge, na?
I'm not charging.
Example.
I will calculate and pay to the government now during the same month.
No.
In cash.
Okay, I am brigade. Okay. There is Mr. A. Mr. A is composition dealer. Now his turnover is around 50 lakhs. Okay. He is doing M sand, he is supplying. He is giving me an invoice. I am registered under composition. So he need not collect tax from us. Yes or no? Yes or no? Correct? Am I paying tax on that? Will it form part of my 80% or 20%? 20%. Then any guesses? How much are 20%? Raise of hands. 20% how much? 20. Aram se full confidence you do. 80% how much? Why 80% service?
Sir, if you keep like that, nobody will buy from that person.
No.
Because you as company.
Effectively, he has purchased with GST. He is actually telling us. So, I mean, though he.
But I am not paying any tax now.
But effectively, is here you are paying tax to them, though not at his bill. This
No,
what you
the
are
composition
registered
scheme,
person.
composition person is not required to collect taxes, sir.
He is paying.
Good.
He is a registered.
I have a client, okay. He does this badminton services. Training he does. He has worked with PV Sindhu and all, he has played. Now, after the sports person, after age 30, 35, they would have started their own training academy. Okay. Now, he is collecting fees monthly, 3,000, 5,000 from the customers. He is not even raising one invoice. He is not collecting any GST. Right? Can he raise GST on that? On that 3,000, 5,000?
But in your example, he is not even a composition dealer, no?
He's composition dealer. I am purchasing M sand from composition person. In composition, see, I purchased from him. He sent me 10 lakh ka bill. In that 10 lakh ka bill, GST won't be there. IGST, CGST, SGST, anything won't be there. Correct? Will it form part of my 80% or 20%?
See, it says registered taxpayer, registered or unregistered. That is the only criteria.
That's the answer. Only registered. See, it is like max. A plus B equal to C only. We have to just learn that application. Once if we know this is the application, this is correct. It will form part of my 80% because it is
Registered.
composition. And he is a registered person. Understood? It is not relevant whether you are paying in the invoice GST is mentioned or not. In the invoice GST number should be mentioned. Okay, na? Okay. Shall we move ahead?
Just one question. Can you give me an example of non-supply cost?
Yeah, this one. It is there. Parking lot. Okay. This is one more example. Okay. Only three quickly I'll complete this lots. So we have went 2 steps we have done. Step 1, step 2. Now this is an example. Let me explain this example so that next 2 slides are easy. Ready? Ready? So okay. These all are my inputs. In inputs, what all things are there? Sand, cement, steel, bricks, flooring tiles, paints, architecture, aluminium, ply and commercial total. Okay. I am given how much percentage it is forming. 10, 15, 20, 15, all of that, it comes to total 100. Okay. Wherever I have highlighted, okay, wherever I have highlighted, that portion denotes unregistered. And here I have given whether the dealer is registered or not registered. Highlighted, it means he is unregistered. Okay, na? And yes, no, yes, no, yes, no, I have written. Okay. What is the total of unregistered? Whether should I pay tax or not? Is the question now.
Cement anyway, the same amount you will have to pay.
No, the question is very simple. Whether you have to pay tax or not.
Yeah.
Yes.
We have to pay tax. Why?
But it is cement.
Cement.
It is
Okay. So, even though unregistered person is 15% only, which is less than my limits of 20%, yes or no? still I'll be ending up paying tax because it is cement, which I procured from unregistered person. Okay, na? Okay. Next example. Same thing. Now there are two other vendors who are unregistered, paints and aluminium. Should I pay tax?
Comes under the 28.
Yes or no?
No.
No, huh? How many of you know? Raise your hands. Quickly. Either we should be right or wrong. We can't be in between. How many of you yes? Here one important learning. If it exceeds 20%, only then you have to pay. It is exactly at 20%, you should not pay. And it is not cement. Okay, na? Okay. Next example. Now, in this example, should I pay or not? Quickly. I am giving you 2 minutes.
Yes.
Yes.
We'll have both. We'll have both. We'll have both, yes or no. Sand, cement, aluminium, this one. Total is 10 plus 15, 25, 45. 45, huh? Ah. How much URP tax I pay?
On cement 28%, on others I think
25.
Value we need. We are
10, 15 and 10.
15 and 10, huh? We'll see. Yeah. Cement, first you will pay under 15. If you pay under 15, what will happen? It will fall part of my registered bucket. Then balance will check. On that balance you will pay. Deemed registered person and then balance you will pay. Correct, huh? In 45, 15 gone, 30 remaining. Then balance 10 I pay. So correct to my 80-20 is mentioned. Clear, huh? Okay. Now we'll see, move to the third step. This is the most crucial aspect. If you know this thing, then this industry you have cracked. Okay, na? We'll see, we'll understand this thing. What is it? Supplies we have done, supplier we have done, where is it used? Is the question. Understood? Huh? What is it? It's a more. It is used in notification. If we read, it is saying it should be used for supply of services. When I mention services, what kind of service are we referring here? Only construction service. Okay, na? Only construction service. Say, I'll take an example. Say, our example, standard example, brigade. Okay? They have multiple projects going on. Do you agree? Okay. One project is plotted development. You know what is plotted development? Plain land is there. Outside the land, they create a gutter, which is sewage, light, dumper road. Then plot value increase, they start selling it. Full 2 acres ka land, cut it into 30-40 slides and then sell. That is plotted development. One is they have this Orion Mall. Orion Mall is owned by Brigade. Okay. In that mall, they charge maintenance cost. Third is they have one project where they are constructing. Okay. In that case, there are expenses which are incurred. Say marketing expense. Say there are head office expense. The staff who is sitting. Should I take all of that in my form part of 80-20? Any guesses? Should it form part of my 80-20?
I think it has to be project wise. It has to be project wise.
Project wise. Okay. Then should it form part of my 80-20? See, here we are building the interpretation, okay? We are not doing anything else. We are just building interpretation. What does interpretation mean? We are trying to build knowledge. If next time you read that word, you should know, this is what this means. Next time you read registered person, you will definitely say composition is included in it. Yes or no? Correct, huh? Whether non-filers of return are included in registered person? Yes or no?
Yes.
No.
I mean, even if you are unregistered player,
Question, you can't extrapolate questions around. Question is question. whether non-filers are considered as registered or unregistered. Ashte answer. Need not extra brain. We know law. Unregistered after 3 months, 6 months, his registration will be cancelled. Leave that. He's registered now. He's not filing. That is his headache, not mine headache. Okay, na? Okay. So now coming back to the question, whether salary cost, head office expenses and all will be included in it. Say brigade has borrowed an loan. Okay, loan of 10 CR. They are paying interest on that loan. Is it forming part of my P&L account? Will it form part of my construction cost? Like, will it form part of my 80-20? No, yes, no, yes. This is what we need clarity on. We are consultants. Who are we? Consultants. So this is a grey matter. It is artha white, artha black. So with our knowledge, still black and white will be there. But we'll help them, only so much is black, so much is white. And we'll charge money for it. Okay? Huh? Okay. So all this, just to take, these head office expenses are nothing but business activity. Okay? Here, just to name, I'll excavate nexus. Nexus is the word, standard term, to establish a link between business activity and construction activity. The things which are coming under business activity, they are not forming part of my 80-20 of that project cost. Okay? Or else what I will do, I'll explain you. If I allow this provision, what the companies will do. Okay? At the end you remind me, then I'll explain. Okay? How is this taken? They are saying you maintain project-wise details. If project-wise I am maintaining, head office expense and all won't come. This is the basis of that interpretation, nothing else. And second is, we are saying supply of services. Here I am just talking about construction service. So only these two parts, if I combine together and interpret, it won't come. Are you ready? Huh? Understanding? Huh? What?
They will allocate the head office cost also not to the project.
Correct. It is not explicitly said in the law. We have to interpret. We are consultants now. Next. First step we understood. Okay. If it is business related and construction service related, which one we should take? Business related we should not take. Now next step with the same thing. Now if it is construction related, say there are few costs which are directly related to construction, few costs which are indirectly related to construction. That side is not there yet. I am not clenched. Chumma saying. Okay. There are few costs which are related to construction, few are not related to construction. Can you tell which are directly related? Architect services. M's and P's and correct? Marketing cost. Is it directly or indirectly?
Neither directly nor indirectly.
Neither directly nor indirectly. Should I include or not include? Not include. We'll gain clarity on this? Come. So, here again we are building the interpretation. Okay. Understand this part, then you are done through. Full session is worth. Okay. Rate exemption notification, if I read, rate notification, it says it should be used for service. Service means construction service. When I see RCM notification it says you have to pay taxes, correct? Huh? There it says it should be used for construction of project, correct? Huh? It should be construction service and it should be used for construction of project. Construction of project is nothing but construction cost. If I read combinedly, what is it? Is it related to construction directly? It means part of my construction service, construction cost. Yes. It will form part of my 80-20 computation. Examples are civil construction cost, cement, steel, all of them. Second, indirectly. Should we include? Yes. So only two conditions. It should be construction service and it should be part of my cost of that project. Construction service also, it should be part of my project also. Clear? We'll move next.
No,
Okay.
how are you saying that it is marketing costs are indirectly linked to my construction service?
Then how will we market project?
So, marketing
I'll
costs
just explain.
are not costs which are incurred to bring the inventory
Correct.
into your present location or condition, right? Even if you don't market the project, you are able to build, right?
Correct. No,
How
but,
is it related?
no, but you. So is it for the? Okay, let me explain you with a simple example. Is it for that project?
It is for the project, but
It-
not
it-
for construction.
It means project-wise accounts.
Ah,
Is it for the project? Is it related to construction? Yes.
okay, again,
Confusion.
building an access to the RERA,
Ah.
under RERA, marketing costs are not allowed under your 70-30 rule.
Correct. RERA and GST both are
Different,
Different.
agreed.
Ah.
But marketing costs, how are they related to construction service? Construction service. That is my. How are you saying it is indirectly linked to your construction related? It is not. Even if you don't market the project, you can build, right?
I'll tell you one example.
Ah,
You know Lal Bagh,
yes,
you know Mantri.
yes.
There's one building which is lying unconstructed from last 10 years.
Okay.
There it is not sold. Building is ready.
So building is ready, right?
Building is ready, but it is not marketed.
Correct.
It is still lying unsold. Is it related to my marketing cost or not?
But are you able to do the 2080 on that? Because although you have not marketed, you have not sold the building, but it doesn't mean that you will not do 80-20 on that, right?
No, I'm just saying when I'm doing when I'm incurring these expenses, if I'm incurring after completion of my building, then it is I'm selling a schedule 3 item. Okay, it is not a part of my cost. Second is when I'm constructing that building, then only I'm doing marketing. Okay, so that to gain working capital, correct? Then it is related. Let me give you an example. One more. Say government cost. Okay, which is an enabler for a construction. Say you are paying. When I say government cost, you pay money for these approvals and all. Is it part of my construction?
It is not part of the construction, but it is a prerequisite to the construction. That is the reason it is allowed.
Correct. When BBMP tax. Is it
BBMP
allowed or
tax
not?
or business plan approval or any
BBMP
development
tax,
plan?
I would say it is not related to construction.
When are you paying BBMP tax? Before construction also.
No. After construction.
Then it is not related.
Before construction also you can pay. Land property tax won't be there.
Property tax.
Then it won't be there. I'll explain it. At the end I'll take up this. Write it down, parking lot. Okay. Second, just to summarize this part, if say total 10 CR have incurred, okay, there is something is related to business activity, which I will say head office expenses, salary, interest and all. Then it is excluded. Say something is related to construction related, directly related to construction, it is included. Indirectly related to construction, it is included. Okay. Directly, indirectly, whatever is related to construction, you are including it. Say for loan only, you purchase only for construction of that project, you take a loan, you are paying interest. Should it form part of my construction cost?
Yes.
Yes. Is it registered or unregistered?
Registered. Registered exempted.
Registered.
Will form. Now this is next step. 1, 2, 3 we have completed. Third step, application also we have learned in the project. This is one beautiful example. Okay, na? We'll take up this example. Whether exempt supplies, just now sir told, exempt supplies forms part of my 80-20 or not. Okay. The question is, this is my standard example. I have sand, wood, water, jelly. Few are taxable supplies. If I do total, all of them are procured from unregistered person. Correct? Huh? All of these are procured from unregistered person. So total is 25%. How much percentage I should pay tax? 5% URP tax I'll pay. Correct? Huh? That 5% is related to whom now? Water, na?
9% is what?
No. On 5% value you will pay. 5% value you will pay. Correct? And that 5% is related to exempt supplies. Yes or no? Huh? Okay. Will you pay tax on this? Yes, no. Yes, no. Yes is one answer. Next. It is from unregistered person and it is exempt supplies. Should I pay tax on this? Okay. No guesses, huh?
Yes.
Either yes or no? Yes.
Yes, because not part of non-GST supplies. Yes is what?
Yes is answer. How many yes? How many no? Okay. We'll gain clarity on this. Okay. Increase in RCM liability. Why this is an issue? It increases the RCM liability of brigade. And second is, one person supplying. If I'm paying tax, I'm treating it as taxable. The supplier who is supplying, for him it is exempt, and I am paying taxable. The same transaction is different from supplier angle and recipient angle. Do you agree? Do you agree? Okay. Let us see what law says on this. There are two views possible. Okay. One is constructive approach. Say you pay tax on this. See the conservative approach. Second is, one is when we refer to this rate notification. I told you new entries are come with 452 Q and all. There it is saying overriding that notification. The explanation says this entry is to be taken to apply to all services which satisfy the condition prescribed herein, even though they may be covered by more specific chapter, section or heading elsewhere in this notification. The word this notification, it means only rate notification because it is strict interpretation. If I take that interpretation and there is no mechanism to claim this tax. There is no mechanism to claim this tax. So I am saying it is aggressive approach, you need not pay tax. But when we are advising client, generally we take conservative approach. But when a litigation comes, you want to experiment, client is ready, giving you free hand, then build your practice. Correct, huh? Approach yes or no? Yes. Technically correct or not? Huh? Yes. Clear? Now exempted supplies, will it form part of my 80-20? Okay. What do we take from here? What is the key takeaway from this example? Any exempt supplies you buy now, ask your brigade people to buy it from registered person only, even if it is expensive. Understanding what is happening in this example? Unregistered person is there. He is supplied exempt supplies, so he is liable to pay tax.
Unnecessarily we are increasing our 20 for exempted services.
Even if it is told expensive, ask your person to buy it from exempt supplies is there, buy it from registered person. Don't ask me any question. Only like that. You can't sit and explain him. Huh?
You won't even understand probably.
Understood? Clear? Huh? Now next. Same one more example. Okay. Now these are the different services which I am using. Say lawyer services, sponsorship services, GTA services, or I'm using central government, state government are giving me different services, renting of motor vehicle. All of these are covered under 9.3. 9.3, what is 9.3? Regularly I pay RCM under that. Correct? And is it covered under 9.4? 9.4 is our excess URP tax. For only RE promoters, real estate promoters, they are covered under this 9.4 specifically. Okay? If these are supplied by unregistered person, should I pay tax for them under 9.4? Yes or no? Yes or no? When I ask yes or no, you guys are confused. Okay? Let us look into an example. Okay? Just I'll take one example. All this is forming, say 30%. This full services altogether is forming 30% of my total cost. Then should I pay tax or not? If yes, how much? Understood, huh? This is 30% of my cost.
It is already forming part of 93, I would have paid already under RCM, under 90. So it will be deemed to be form part of your registered purchase.
It's not necessary, na? You have to pay under 9.3.
He has paid under 9.
It is
Where is it written? Because specifically 9.4 is there, na? I won't follow 9.3. See, 9.3, 9.4 are just collecting provisions. 9.1 is levy provision. Correct, na? 9.3, 9.4 is collecting provision. Opening up a space, mind space opening up. Okay. We'll take this 30% example. This is forming part of my total 30% cost. Okay? Should I pay tax under 9.3 or 9.4? First advice is yours. So boss, don't do any litigation, pay 9.3. But who we are? We are consultants. clients pay money for litigation. We have to do litigation. So one is, if it isn't excess URP, then to pakka you will pay. Okay. If it is not forming part of your excess URP, say it is only 20%, should you pay in that case? I have two options. Okay. One is conservative option, wherein I will say, yes, 9.3 is a specific entry. You pay tax. Then this RCM notification, which is 9.4, okay, which it is not intended to give exemption to earlier existing RCM notification, which is 9.3. Correct, huh? So it is harmonious interpretation. 9.3 plus 9.4 pay tax. That is conservative approach. I'll say one more approach. Now client is ready to, we have to defend him. First we have to scale and then we have to mint money. So what is one more approach? I'll say 9.3, 9.4 both operate together. 9.4, it is only for real estate sector. It is more specific to it. Okay? And this 9.4 entry is new. Is new entry after 9.3. So new entry will prevail over old entry. Same option only. Same thing only. But how we look at it differs. Clear, huh? Clear, huh? First is, we advise this only. First 9.3 you pay tax. Always. Because it will form part of your deemed expense. Then we are advising, we don't want to give him, we don't want to keep him under shadow, grey area. You be under proper area, grey area. Since now he has done the mistakes. Why we are doing this session now? Because August is the demand orders. You will get 73 ka. By November you will get 20, 21 ka demand orders. You should have something to stand. Na? These points will help you to build litigation. Step 6. I'll take an example. There is a land in Kengeri. Okay, land in Kengeri. The project is 5 acres ka land. 4 years the project will span. Brigade has tied up. They will do the project. The ratio also is agreed 60-40. First year they launch the project and start getting the revenue. Say 10% flats are booked and they apply. 80%, 80-20 applicable, 10%. Second year project. They booked another 30%. So total booking is 40%. How much percentage they'll apply 80-20 to? 80-20 rule. You understanding the question, huh?
30%.
30%. Correct. Why 30%?
10% already discharged.
Okay. Now in year 3, another up to 80% it is booked. So how much percentage will bill this 40? In year 4, post OC 80-20. Will you apply? No. Post construction not applicable. So say, what can I apply this rule wherein full 5 years only one project is there now. At the year end, all in 1 year it is excess. Say registered purchase in first year I made 90%. Second year I made 70% registered purchase. 10% can I carry forward from last year? Allowed na, same project. Same project allowed na. Same project allowed na. Why? Year wise. Correct. So it is year wise, not year to date wise. This is. And threshold is independent. There is no carry forward which is applicable. Clear? Huh? Okay. With this, we have completed the 6 steps. Okay. Government has issued few FAQs. We'll have a look at those FAQs and then take it forward. What is the first FAQs? If the value of purchase is less than 80%, at what rate GST is applicable? Is less than 80% means more than 20% URP. Will you have to pay GST? What is the rate? 18%. That is what the FAQ is saying. Will you pay under forward charge or reverse charge? Reverse charge. Who has to pay, landowner or builder? Builder. Then if you have purchased cement, what is the rate of tax? Super. You are good to draft FAQs. Now next. Okay. Now this new rates have come. 5%, 1%. If we have to opt for new regime, then they have to make payment in cash, that too via RCM, 80%. They can't avail ITC. They have to maintain the accounts project wise, and they have to report it in 3B. All of that they have to do. Is it mandatory? Is it mandatory? Yes or no? Yes or no? It is mandatory. Builders are not given this option, even though it is coming by notification as an part of an exemption notification. It is mandatory. One more option is, if I don't want to opt for this, then I can show it as works contract and 18%. But they won't opt for it because at the end customer cost will be more. 18% they won't book flats. First Maharashtra, what happened? You remember, na? Yeah. Third, salary, wages and all. Will it form part of my 80-20 computation? No. Next, a project is, a residential project is there. Same Kengeri project, okay? In that Kengeri project, full residential project, 15%, say 10% is commercial. Duddu society they have built with around 800 flats, and they have made few small shops, mall and all. Is it considered as residential or a commercial project?
Residential.
Why?
These are considered as amenities.
Proportionate basis. So government has given, if up to 15% is a commercial area, then it can be treated as residential only, and you discharge tax at lower rates. If it is commercial, then what is the rate of tax applicable?
18%.
12%. And 18% also is correct. But it should be very clear, effective. Okay. Then next. Clear up? This one. If it is say more than 15% is commercial. Okay, say 20% is commercial. In case of a real estate project comprising of real estate as well as commercial portion, more than 15%, how is the minimum procurement limit of 80% to be tested? Evaluated and complied with where the project has a single RERA registration and a single GST registration, and it is not practically feasible to get separate registration due to peculiar nature of buildings. Say, in this case what is happening? Commercial project is not 15%, it is 25%. Then how will it test 80-20 limits? They will say any sand and all you procure, how much is area of commercial project and how much is area of residential project, you allocate based on this carpet area, and then you pay. Even though it is not binding, but when we read this circular, it shows government how it is interpreting. First we built our interpretation, then we are reading this circular, so we are clear. Correct? Huh? Second. So we'll read next FAQ. Where the condition for receiving 80% of input services from the registered person shall be applicable if the developer opts to pay to tax under old rates of 12% or 18% in respect of an ongoing project. This is a project. When these new rates are come into effect? 1st April 2019. Before that, old rates were applicable. Developer is saying, no, I will continue with the old rates, though they are subject to few conditions here, there, correct? Huh? In that case, should I follow this new rates or old rates? Old rates. In that case, ITC will be available or not available? Available. That is what SAQ is. Aram, so you can scream and tell this answer. Okay. Where the inverse applies.
I have a question on the previous slide. So, is it possible to still go on the old rate?
No.
So you are saying after 1st April 2019 also you said you ongoing project.
Ongoing.
Yeah, fine.
Okay. Second. Where the inward supplies of exempted goods or services shall be included in the value of supplies from unregistered person while calculating 80%. We saw that example. We saw whether it should be included or not. Included, yes. But we have one more interpretation, right? Now FAQs are binding us. No, client is paying, FAQs are not binding us. We can litigate this matter. Okay. So there is land which is purchased, okay. Brigade has purchased the land. Will that land cost form part of my 80-20 computation? No. Schedule 3 transaction. 4. Where the amendment rule shall apply to all RRPs including ongoing projects. In case of an ongoing project. Okay. Rule 42, is it applicable? No, I haven't told you this part. Correct, na? Let it. We'll skip this.
Let us read the answer.
Okay. Okay. In case of an ongoing RREP, in respect of which a promoter opts for new rates, 1% and 5%, and underwent the transition of ITC consequent to changes of the rates of tax on 1/4/2019. Okay. ITC shall be determined under sub-rule 1 of Rule 42. What does that mean? I'll explain. Ongoing project, you would have availed ITC. Then you are saying I'll opt for new rates. ITC which is availed, you will compute it. How much you have to reverse. That reversal, how you have to compute is old, what do I say? Unsold divided by total, area wise, into value wise, unsold divided by total into ITC. If you apply this formula, you will get that much you have to reduce. That is what it is saying. Okay, na? Okay. Now, these are few. Okay, tell me any questions you have. First, any questions?
I had one question.
Ah.
In the P&L account, there was something non-supply
Correct.
costs.
What are the non-supply costs for? Correct, huh?
Yes. Example of
Non-supply cost. Yes. And borrowing cost. Interest on loan.
Fuel, everything.
Huh? Interest on loan. Is it forming part of my? Correct, huh? Borrowing cost. Example. I'll take a few examples, few practical things which are noted. You answer them. Okay. First, where the goods are purchased from a registered dealer, but he did not upload in 2A or 2B. Recipient GST number is also not there in the invoice. Will it form part of my 80/20? Will it form part of my registered dealers or unregistered? Goods are purchased from registered dealer. It did not upload in 2A. You are also with that, you are shaking hands with that officer who told it is not appearing in 2A. We are which party we have to decide once? Either this side or that side. Okay. Always if 2A it is not appearing, we don't take credit. Huh? We have invoice, we have paid taxes.
You said recipient GST number is not there on the invoice.
Registered, na? Okay. Next, interest on loan taken from friends and family who are not registered. Would it come in 80% category? After this session, I am saying practice is not good. I'll be a builder. So I'll ask my all relatives, give me 10 crores. I'll start building in front of ICI. ಭವನ್ ಖರೀದಿ ಮಾಡೋಣ, ಭವನ್ ಮುಗೋಣ, ಒಂದು ಅಪಾರ್ಟ್ಮೆಂಟ್ ಕಟ್ಟೋಣ. ಓಕೆನಾ? ಆ ಕೇಸಲ್ಲಿ I'll pay interest to them. Are they registered or unregistered? Unregistered. Will it form part of my 80/20? No. Huh? So, it is related to construction, then it will form part. If it is not related to construction, borrowing cost, not related to construction, then it will form. It will not form part. I'll tell you one simple test what you can do. I also face the same issue. One simple line you remember. Okay. Cost incurred by promoter. Is it incurred by promoter? Brigade. And whether it is used for cost incurred by promoter for construction of project. Whether that cost is incurred by promoter which is for construction of project. If answer is yes, it is included. If answer is no, it is not included. In this case, is it included or not?
yes.
And if I am just buying, taking money and not doing construction activity with that, will it be included? No. Then it will form cost of non-supply cost. Okay, na? Okay. TDR, transfer of development rights, certificates purchased. No, TDR is specifically excluded. FSI, TDR. So I told you, tax otherwise payable under 9(3), not paid.
Sir,
9394.
you just saw that.
Yes or no? Is it thinking? Once you say, I'll know. You understood or not? Okay, na? 93. Will it form part of not? Once I say yes, it will form part of my 93. Okay, project is span over first 3 years. First year, no shortfall. Second year, shortfall less than 80% is there. Okay, third year, no shortfall. Overall project, there is no shortfall.
Year wise.
Year wise. Good. Does 80% include head office expenses? If yes, how to allocate? ISD or cross charge? Not done parallel. So, our brigade has multiple projects, project 1, project 2, project 3. Each of them, there are registrations separately they have taken. There are few head office expenses. Now in one project, they are falling short of, it is just 60%. To do tax planning, what they will do? From head office expense, they will allocate 20% to this. It is same, registration numbers are same, na? No problem at all. So everything is registered now, they need not pay tax. Correct, na? We saw, that is why head office expense is not included. Understanding tax planning, na? Yes or no?
Yes.
Okay. Material which is lying in site 1, it is used from site 1 to site 2 and site 3. In that case, will it form part of my 80-20? These are all practical questions. One is, I can actually determine this material is cost, from this cost to this cost, I move it, so it won't form part. Second is, based on carpet area, you allocate. Okay? From 1/4/2019, everything is based on carpet area. Okay? Next. Okay. Now when I am saying expenditure, in my P&L account, whether I should incur or not incur. In sense, those expenses are appearing in my books of accounts, but are not paid. Should I consider those expenses? Yes or no?
Yes.
Yes or no?
Yes.
That's all. We have to follow books of accounts. And few cases, cost accounting standards will be there. They will determine as per that. But technically speaking, cost accounting standards we have to follow, CAS 4. But now, general things, books of accounts will follow. It should be incurred, expenditure, it should appear. Now transition of GST from old regime to 5%. Any special attention for past purchases? Earlier I availed ITC. Now I am opting for new regime. What should I do?
Day 1 to 31st of March, you have to reverse, you have to compute and reverse.
We have to compute that standard formula I told you, na? That one. We have to compute, we have to reverse, and from now onwards nothing. Basically, past purchases you have to do nothing. That's all it is. In case of redevelopment of a halted project by an allottee association, should this compliance be checked? What is redevelopment? I told you one project is halted Mantrika in front of Lal Bagh. How many years it has been? 10 years. Now they are restarting that project. They should follow new regime, old regime.
It's an ongoing project.
No, they have to follow new regime. It is halted. Now they will start. In these cases, what will happen? Redevelopment. I told you special approved resolution. The cost is computed differently. The dynamics is same. How you compute the value, it changes. In case of redevelopment, the cost you incur will change. So value will change. Simple. Does landowner needs to be concerned about this clause? Okay. Does landowner? At the end he need not. Everything is shifted to brigade. He can do aram se Chinese. Need not worry. What happens to commercial apartments? Old regime. 12% with ITC. Correct? Our ERA project 70% residential and 20%, 30% commercial. Mixed project. We saw an example. Wages paid to daily regulars who are not on rolls. Will it form part or not?
Because it is on
Faces
contract.
are saying yes, mind is saying no.
No, it is not considered as salary, so it is not technically part. I mean, it has to be treated differently than salary. Yes.
So yes or no, it will form part or not? No. It will form part. Only if it is salary, it is exempted. If it is not salary, not exempted. So you know this. How will you do tax planning now? Huh? Dude,
We will have to deduct from it.
what if I do individually, then it will form part of my, what do you say, URP. So we have to bring it under RP. I will say subcontractor, go baba, तू अपने को labor supply कर. So all of that will be from registered person. So it will form part of my URP. This is tax planning. Okay. One more option I will give. one more. You want to see Excel? We are running out of time. 8 o'clock. You want to see Excel or how is it?
How much time it takes?
Good.
No idea. Yes? Quickly? I'll take 2 minutes, not 3-4 minutes. That's it. Can you see this Excel? Sir? Excel first.
No.
Oh, one second. I have to exit this presentation. Yes, now you can see. Can you see? Can you see? Okay. I have taken one live example. Okay. What is live example? These are different costs. Full everything you will understand if you understand this example. The project is spanning over 3 years. The year 1, year 2, year 3. Okay. Now I am saying M sand, jelly, steel, bricks, cement, which is from a registered person. Marketing cost, registered person. Okay. This yellow denotes the things which are from registered person. Green denotes which are from unregistered person. This pink denotes which are non-supply costs or schedule 3 which are excluded. Okay. Now just have an example. Cement from unregistered person. It is green. Okay. Security services under 9.3. If that person is unregistered, it will come under green. If it is registered, it will come under yellow. Okay. Interest cost. Interest cost. These all Madu guys, will they be registered? No, na. Beautification cost. What is beautification cost? After the project is complete, full name board, next level decorations and all I do. That is post OC cost. Will it form part of my 80-20? Huh? Yes or no? No. Post OC, any cost. The 80-20 is not applicable now. Only during under construction period it is applicable. Civil cost. After building is completed, ayyo, ceiling moves hoyto, yen construct madidira. Our time included or illa? Our time not included. 80-20 are applicable illa. Architecture design, all this, government expenses. URP. Okay, na? Head office expenses. All this is how much? Total 95. I have purchased capital goods also. This you see, this is taken from expense register. Capital goods will never come in my P&L account. Are you clear? What are capital goods?
Crane.
Which are capitalized in the books of accounts. If it is capitalized in the books of accounts, where will it appear? Asset. Will it form part of my P&L account? No. Yeah, that's what we are doing. Total cost is 95. Capital goods I have taken, I have excluded them. Schedule 3 I have excluded. Depreciation I have removed. Beautification cost, all these eliminatable costs I have removed. Okay, huh? Then, what is remaining is my cost, total cost for my 80-20. Okay? Then 9.3, I have to pay tax. I told you. Only if litigation we won't pay. Else I will pay. Correct, huh? Cement, compulsorily I have to pay. Correct? Then other than RP. Deemed RP purchases. Deemed RP is total. These are unregistered person. After paying, they will form part of my RP. Yes or no? Okay. Then how much is required? My total cost into 80% is my requirement. Correct, huh? If I reduce both, how much is shortfall? 13. Correct? On this I will pay taxes. So 9.3, how much? 9.3 I will pay. How much will I pay on 9.3? My 9.3 ka. Correct? Cement at 28% I will pay. URP, which is shortfall. Only on that much I will pay. Capital goods I will pay at actual rates. Total payment is how much? 7.51. Now coming to year 2. Same scenario we continue. What is my total computable cost? 52 again. Okay. How much is required? 49. Am I doing any shortfall? Nothing. So need not pay anything. Only 9.3 I am paying. Okay. Year 3. All of this cost are there. Beautification and all I have excluded. How much cost is required for this one? 80-20, 49. Okay. Count. Actual 80% is only required out of it. 39. How much short I am falling? 13.2. I will pay that tax. Now I can change the values here. Everything will change. Say 0 RP. Then what will happen? Okay, shortfall increased. I have to pay. You can do maths with this. for better understanding. Clear, da? Clear, da? After saying all of this, so many shits there, I'll give you one tax planning avenue. Tax planning avenue, I'll let you know. What do you understand by this 80-20 now? You have to pay URP tax at 18%, correct? Huh? So you can ask your builder, okay, the rates, the items which you are purchasing, which are more than 18% rate, you purchase it from unregistered person. If you purchase from unregistered person, it will fall part of my 20% bracket. I'll end up paying only 10% on it, 18% on it. So 28% saving. Yes or no? What is one more tax planning avenue? Exempt purchasers, whom we have to purchase from? Registered person. Are you confident enough compared to last time, before this session? How much time we spent? 1 hour 50 minutes. Are you better than how much you were better 1 hour 20 minutes before, 1 hour 50 minutes before? Correct? You can pitch clients now. Sure? Huh? Thank you everyone. Any questions you have? Any questions? Yeah.
Things. Practically in 3D we are going to reverse all the ITC that
Monthly we have to do. 4B2.
Yes.
Correct?
So 4B2, it will again form part of your, based on the new circular or new this 3B, it will again form part of your recredit claim that it has to go under A only then.
Correct. Then
So that will keep appearing in my dashboard again.
Even it will form part of a 2B. See what will happen. These builders will have multiple registrations in one project. All you will complete. One good GST workings you will make. Then you will give them.
Yeah, it's 60 square meters is the carpet area. About
60 square meters.
That is not carpet area. It is square meters, that's it.
it's 12 meters. What is it?
Carpet area only. Carpet area. I can check and let you. Okay, one more thing. Sorry, there is one thing missing. I didn't tell you the sources, right? Sources I didn't tell you.
Can we get that Excel?
Yeah, I'll send it. After this session, you write post on LinkedIn, I'll send that Excel. Okay. So these are the reference. Okay. All this new rate card, it has come changes via this. Notification 3, 4, 5, 6, 7, 8, 9, 10, 16 ROD rate of change. Removal of difficulty. This is the main source for this. After reading this notification, you won't build this knowledge. What you have to do? We have to read few publications. Institute magazines come monthly, or a few other organizations will be there. You get updates, you keep reading, slowly you will build interpretation. Then your practice will go. Gear up for litigations upcoming. Thank you. Anything else? Any questions? Sure? Better than before? Say hip hip. Hip hip. Thank you.
Please take this.
Members, hope you had a good session and good understanding of the 80-20 rule for real estate. We thank Rahul Gandhi for being here on behalf of Bengaluru branch. I request our chairman to hand over a memento. Can we have a round of applause? Thank you, Rahul. And thank you, members, for participating, and see you all next week around the same time. Thank you. Good night.
Thank you.